Welcome back, Adam here, and today I'm going to be covering how to complete the self-assessment tax return for capital gains when disposing of a residential property. To do this, I'll cover a little bit about the background on how capital gains tax works when you're disposing of residential properties, and then I'll also show you the entries that will be needed on the tax return. When making those entries, I'll be using our GoSimpleTax in-browser software. Before we get into it today, don't forget to like the video and subscribe to the channel for more helpful tax content. I'm also going to link down below to the GoSimpleTax page so you can access the exact same software that I'm using here. You'll just need an email address, a UTR number, and your basic contact information to get signed up. First up, let's run through how capital gains tax works for residential properties. The most important thing to note is that if you dispose of your main residence, then this will usually be exempt from capital gains tax. So anybody worrying that they're going to have a huge capital gains tax bill when they sell their house, the likelihood is that you won't. Principal private residence relief ensures that, amongst a few other conditions, providing that you were living in your house when you disposed of it, that you owned it at the time, and that you didn't buy that house purely to make a gain, then any gain on disposal is usually 100% exempt. What that does leave us with, though, are residential properties that are used as second homes, properties that are used for investment, such as your traditional buy-to-let or your holiday let, and then whatever other reason you might own a residential property that isn't your main residence. These properties typically will fall under the scope of capital gains tax. So if you dispose of one of these properties and you make a gain, then you're usually going to need to both report that gain to HMRC and pay any resulting tax liability. The current tax rates that apply to capital gains on residential property are 18% and 28%. The amount you pay depends on whether that gain falls within any remaining basic rate tax band, or if it falls into the higher rate band. An individual will also benefit from a tax-free allowance of £6,000, which is known as the annual exempt amount. Just note that this is set to decrease to £3,000 from the 6th of April 2024. In terms of actually calculating the gain that you'll need to declare to HMRC and potentially pay tax on, it will be the usual capital gains calculation. You take the proceeds from the sale, which is the amount that you sold it for. You then deduct any costs that are related to that disposal. Solicitor's fees would be a good example. You also deduct the cost of acquisition, which is the price that you paid for the property, and any allowable costs relating to that acquisition. Again, solicitor's fees are a good example. And then finally, you also want to deduct any improvement costs. So maybe you extended the property in this example. That should leave you with your gain or loss on disposal. Now, let's go through how to actually report this gain on the self-assessment tax return. So here I am, I'm logged into my GoSimpleTax account and I've got a blank return in front of me for the 2022-2023 tax year. And in order to declare my capital gain on residential property, I can start by, on the left-hand side, adding a new page, and then I'm presented with all the different pages of the tax return that I can add. So I've got your typical ones that will get used: employment income, self-employed income, partnership income, rent-a-room property, furnished holiday lets, foreign income, and the one that we're going to want is capital gains, SA 108. I will just point out that income from your property whilst you own it may fall under a different section. So it could fall under property section or furnished holiday lets, rent-a-room, for example, any of these here. But when you're actually disposing of that property, it falls under a different tax altogether. So it's capital gains tax and therefore needs a different section, which is this one, SA 108. And it says here below it, if you disposed of assets and are required to complete the SA 108 capital gains tax schedule, then select this option. Please only add one times capital gains SA 108 page to your tax return. So if you have multiple gains, if I sold off 5 properties or I sold off properties and shares and I had lots of gains that I need to declare, it's still only going to be one section to add. And I can add that by clicking select. We're then presented with the tailoring questions for this page. There aren't many tailoring questions for this section, and it's a bit of an odd one to start with, additional information. So if you do have anything that supports your disposal calculation or any information that HMRC might need to know about, then you can enter it in here. But I'm going to leave that blank, and for most simple disposals, you'll also be leaving it blank. We're then asked, have you used estimated figures in this calculation? Now, if you're getting close to a deadline and you haven't got all the information available to you, sometimes it might be better to submit estimated or provisional figures and then come back and correct it. But just note that if you do that, if you click yes here to estimated figures, then HMRC are going to expect you to come back at some point and amend those. So just bear that in mind. I'm going to say no. And then ask for my name. So I'll enter Joe Bloggs in here. And at the bottom, losses available to be carried forward to later years. Now, it's really important that if you make a loss on disposal, you still declare that loss to HMRC, and then you roll that loss forward until you can utilize it by offsetting it against a future gain. And if you did have a loss, if you had disposed of a residential property a few years ago and you made a loss on it, you would want to keep rolling that forward by entering details here in your self-assessment tax return, so that when you do it, eventually have a gain, you can utilize it and make the most of it. I'm going to leave it blank. We'll assume that I don't have anything to use, so I'll leave that blank and save. And then we're presented with the capital gains pages, the information that I'll need to enter. This is where we'll actually give the details of how much we sold the property for, the costs that we incurred, and it will calculate the gain, hopefully in the same way that we've calculated it in our example. So to add details of a gain, and in this section, this is just the general capital gains pages. So I could add details of gains that I've made on property, on shares, whatever it is, it can all go within this one section. To detail that this is from residential property, I'll need to click on the plus sign to the right-hand side in green here. And then I'm presented with a drop down. So I've got a list of categories here. You've got listed shares and securities like Amazon, Google, Tesla, these types of things, public companies, unlisted shares and securities, private companies, and then you got property, other assets, share schemes, additional liabilities, losses, adjustments to capital gains tax, residential property, non-resident capital gains tax, gains on excluded index securities. So all you're doing, you're looking for the category that best fits your disposal. And in my case, clearly that's going to be residential property and carried interest. So I'll select that one, and then we get the pages that we'll actually need to complete for our residential property disposal. So just note here that you've got 4 different tabs that we'll need to work through, starting with the sale, and we should have all those details already in our calculation. So the description, typically you're going to give the address of the property or a reference for that property. I won't give an actual address, but I'll put property 1. And then I'm going to enter the date that I actually disposed of this property. So I'm going to go with the 1st of March 2023, as that falls within the tax year. And then we want the amount sold, or if given away, the market value. The reason they ask for the market value is because if you sell your property below market value, or you give it away maybe to a friend or family, they're still going to want to charge you capital gains tax on that. There may be some other exemptions that might apply, but to avoid everyone just giving away their houses and selling them at a discount, this is how they get around it. So that may apply. In this case, it will just be the amount that we've sold it for. So the amount that we sold it for was 500,000. So we enter that in this box. That's our proceeds. And below that, I've then got the costs that I incurred on sale. So the example that we had of this was solicitor's fees. And on disposal, they were £3,000. In the description, I can just put that they were solicitor's fees. Doesn't need to be a huge amount of detail. And then below that, we've got some more obscure questions. Some of these won't really apply, but we do need to work through them anyway. So attributed gains where personal losses cannot be offset. If you don't understand a question, and that one is one that won't apply to many people, you can always click on the question mark on the right hand side and it will point you in the right direction. So in this case, it's telling us to go and look at HS 301 on the gov.uk website. And if you go and look at HS 301, it's going to talk about beneficiaries receiving capital payments from non-resident trusts. In this case, I'm not a beneficiary of a non-resident trust, so we know we're happy it's not going to apply, so I can leave that box blank. Do you want to offset losses brought forward against this year's gain? We've spoke through that already. I don't have any losses brought forward, so I won't offset anything here. But again, this is why it's important that you do declare any losses if you have any, because you could, if you had a £50,000 loss brought forward and 100,000 profit or gain to declare this year, you can get away with only paying tax on 50,000 by offsetting the two. During the tax year, did you submit a real-time transaction tax return for an asset of this type? Now, with residential property, since a few years ago, at least a few years ago, I think, you have to declare any disposal of a residential property in real time. You get 60 days to actually declare the disposal and pay any tax on that disposal. Now, in my case, it's fine because I disposed of my property at the beginning of March. So technically, I can submit that tax return from the 6th of April. So that would be within the 60-day window, providing I do it by the end of April. In a lot of cases, you won't have that luxury. You may not have a tax return that's due. You may not have all the information needed to submit your tax return. So HMRC also provide a real-time gateway that you can log into. If you just Google HMRC real-time capital gains reporting, you can log in there and provide details and pay any tax that you owe. Even if you do that though, you still need to declare that gain, all that information on your tax return if you submit one. So just be aware of that. And to do that, you would click yes here. Did you submit real-time transaction? And you would provide those details. You would tell them, yes, I made a gain of X amount, but I've already paid tax of this much. And they'll make sure that you're not taxed twice on it. Okay, you want to pay tax twice on those transactions. What is the carried interest? Another one that's not really going to apply to many people, but if you go and look at what a carried interest applies to, it will start talking about investment funds and partnerships, taking profits from partnerships. So in 99% of cases, it's not going to apply to your average disposal. Were you chargeable to non-resident capital gains tax? I'm not a non-resident, so I know that one won't apply, so I'll leave that one as no. And then just be careful not to save from here because we've got additional information to provide. If you scroll back to the top, you've then got additional tabs to work through. So the date the asset was bought, so we'll go with the 1st of March 2013, so exactly 10 years ago. And the cost at that point in time was $250,000. Please enter the incidental cost of acquisition. So again, our example was solicitor's fees, although solicitor fees were a little bit cheaper back then, so I only paid £2,000. And description doesn't need to be hugely detailed, but we want to make sure that's all included to reduce our capital gains tax bill. And then finally, we've got the improvement cost. Now, I did an extension on this property, so I want to make sure that I'm claiming the cost of that. That's a capital contribution towards the property. And I did that extension on the 5th of May 2015. That extension cost £25,000. And that was a kitchen extension. Again, you don't need huge amounts of detail, but providing someone reviewing the return can understand. Onto the reliefs tab. We've mentioned the one relief that would really apply to most people, or potentially apply to most people. Gift holdover relief, rollover relief, employee shares, entrepreneurs. There's loads of them available. Most of them won't apply. But again, if you do need to check any of these, just go and check them on the gov.uk website and they'll give a bit of information about how you qualify and what they apply to. For most people, though, it's going to be principal private residence relief. The only thing I will point out here, they talk about where letting relief does not apply and where letting relief does apply. If you own your property, but maybe you went abroad for a couple of years, quite often you can still get principal private residence relief, providing you meet the conditions of the letting relief if you let your property during a temporary period of time whilst you weren't there. So again, It's just checking whether you are applying for that letting relief. If you've never let your property, if you've always lived in it for the full duration, then of course it will be the top one, principal private residence relief, where letting relief does not apply. If none of those apply, which will be my situation, I'll move on to the next page, leaving it blank. And then we've got our calculation. So this is telling me exactly what I expected. We've got total proceeds of £500,000. We've got total cost of 280,000, which is my 250,000 acquisition cost. We got 5,000 of solicitor fees on acquisition and on disposal. And then we've got a £25,000 extension that we did. So that looks absolutely right to me and leaves me with a £220,000 gain. If I'm then happy that we've completed all of the tabs, I can save and continue, and what you'll see is it will calculate my tax bill on the left-hand side. So it's telling me on my £220,000 gain on property 1, I've got a £54,386 tax bill, which will be a combination of 18% and 28% tax, because I haven't declared any other income. It will tax me on what it can at 18%, and then the remainder will be at 28%. And those were the entries I would need to make to declare my capital gain on residential property via our GoSimpleTax software. From there, all I would need to do is declare any other income that I might have, which of course would impact my tax bill, and then follow through, continuing and submitting my tax return. Thank you for watching. See you next time.